Hey, eager mining investors out there. Welcome to Classic Value Investors and Micro Cap Explosions. This is Mariusz Konieczny bringing you another fantastic opportunity in the mining space in the video series, Why I Hate Mining Stocks. Okay, how would you like an opportunity? 100 million market cap, clean balance sheet, money in the bank, no debt, lowest cost production in the world. You are guaranteed, it's not a projection, you are guaranteed about $300 million of profits from the mine. Profits, not revenues, profits from the mine. $300 million over the next 9 years, and you are paying $100 million market cap for it. How would you like that? It doesn't get any better. No debt, cash in the bank, lowest cost production in the world, cash flowing machine, 300 million profits over the next 9 years, and you only pay $100 million for it. How would you like that? And how would you like to find out that if you invested in this opportunity, you would have lost 90% of your money? No, this is not a joke. 90% of your money. I kid you not. Okay, let's get on with it. Welcome to Monument Mining.
Monument Mining is an emerging gold producer.
Yes, it's the same person that also ran Yukon Nevada Gold, which was the first video.
Its properties are located in Malaysia, not far from the capital. We have good government established infrastructure that has helped us reduce the capital cost of this project. And since we first started to acquire the project and go forward with it, we've now since built the mine, we're producing gold, and that's a really good platform for us to produce cash flow to now develop the company seriously. We are producing gold. We made our first gold pour in October 2009, and that was in record time because we only acquired the grassroots property some 2 years before that. So we've taken the property from acquisition through financing, through engineering, permitting, construction, and partial commissioning in 2 years and 3 months.
Okay, so this was a huge achievement. The company put this property into production in a very short period of time, and it was producing gold at an extremely low cost. Over the period of 9 years, it generated about $300 million worth of profits. And the name of this mine was Selinsing Mine, located in Malaysia. And at that time, Selinsing was producing, not a promise, it was producing 40,000 ounces of gold per year at a cost of about $300 per ounce. And it had a life of mine of about 6 years. So yes, the idea was also to increase the life of mine, but also to increase production from 40,000 to 60 and to 100,000, and obviously increasing the cash flow even further, and put it into other projects and build this company seriously into a mid-tier gold producer and also producer of other metals.
Next step is we have an ambition to expand the plant. Firstly, we have to finish commissioning the CIL, which we're doing right now, and that's the second phase of this project. Once we've done that, we then plan to double the size of the whole plant. In other words, instead of having a capacity of 400,000 tonne a year, it will then have a capacity of somewhere between 800,000 tonnes and 1 million tonnes per year. We'll also be acquiring a further land parcel to expand our land holdings, and we will be recommencing exploration. The reason for continuing the exploration program is to increase our resources and to expand or convert existing resources to measured and indicated reserves. That gives the project life.
So these are the plans for the Salinsing, right? Produce gold, expand, and now let's hear what he has to say about long-term plans of the company in general.
Our long-term goal is to find another project that we can turn into an operating facility within Malaysia. That's the first next step. We're putting a major focus into exploration and acquiring some other projects. They will be a series of projects that we call a pipeline, so that we will have grassroots exploration, we will have development projects, and we might even be out lucky enough to find some sort of producing or near producing asset that we can acquire and convert that to our ownership. So we're in the process of developing that pipeline of projects. We now have cash flow, and I think the rise in our share price is increasing our market cap to the point where we can use our stock as part of the currency for acquisitions. So we're very much on the path of growth. This year we've produced gold at a cash cost of $226 per ounce, which is amongst the lowest in the industry for that size project. And our average for the first 5-year pit will be 317, and we're just announcing that shortly.
Up to this point, the company acquired more land, as you heard, and now in the next little clip, he is going to talk about this major acquisition that the company did, Mangapure. It's a polymetallic project, and because they had so much cash from production, they actually paid for it all cash. They didn't take on any debt, no financing. In total, Mangapure cost them $75 million, and this was going to be a fantastic production. They, as you will hear, they have a special technology that they will put it in production, and I remember even talking to him on the phone. It was going to generate like $300 million of profits per year. And it was an exciting opportunity. It was bought out from bankruptcy, because he's a bankruptcy specialist. So he bought out the project at a cheap price, in total of about $75 million on the cheap, as a distressed sale.
As you know, we have announced to the market that we have entered into a binding memorandum of understanding with a vendor of the Mangapure project in Malaysia. This project, we went out and actively sought such a project because we have some access to technology that will make it a very green, clean operating project, because polymetallics such as Mangapure are complex and can create environmental issues. So we've surprisingly located such a project just up the road from us, so to speak, about 2 hours drive from our present project, which is very, very convenient. And of course, in country in Malaysia, where we are well connected and have an existing workforce and good connections within the country. And we're comfortable operating in the country. So where we are at the moment with that acquisition is we are going through a very detailed due diligence process. The project had a historic bankable feasibility study done on it. It was prior to the introduction of a 43101 standard, so we have to replicate all of that in due course. But we don't have the time to go right through a resource update, so we're doing confirmation drilling, confirmation metallurgy, doing all of the test work, doing all of the prudent commercial testing that we have to do on title, on financial difficulties and issues of the predecessor, so that we are as sure as we can be that it's a sound acquisition.
Right before the Mangapure acquisition, the company was sitting on a huge amount of cash, and he was asked what he's going to do with the cash. So here it's still prior to the Mangapure acquisition, but just know that he used all of the cash to pay for Mangapure.
We constantly get questions about what we will do with all of our cash, and of course that's an interesting question, and we can't give exactly the answer to that because plans must remain fluid. However, we do know that we have quite a bit of cash right now. We do know, because our warrants are in the money, that there's a very good likelihood that we will have another $70 or so million flow into the Treasury from the exercise of warrants. And of course, we'll have additional cash flow next year from production. So that all will add to our Treasury and put us in a reasonably good position. Having said that, of course, we've got the cost of acquiring Mangapure if we do go ahead with that. We will have to write a check for $50 million. We can certainly do that right now. We're just being careful about our due diligence. And once we've acquired that, should we do so, we then have the capital expenditure program to develop the project cautiously in phases so that we don't have to go and raise huge amounts of additional money. We may have to raise more money, but there are various ways to do that. So we're going to be studying that, and we are doing that presently.
In addition to Silinsing that's producing, now the acquisition of Mangapure, Monument made another acquisition, which he's going to talk about it in the next video.
And we've recently closed the Mersing acquisition, which is an earn-in project in a different location in Malaysia on the east coast, and it is sitting on an east-west trend mineralised zone that is something in the order of 30 kilometres long. So we have staked that, we've applied to the government for an exploration licence on that, and we have an earn-in agreement that gives us the ability to earn 100% of that project. So we are proceeding with that, and the combination of all of that area of land is quite a significant land package for a junior company in Malaysia. We'd probably be one of the biggest, if not the biggest, land package owner in the country producing gold.
I forgot to tell you that Mangapure, when I meant by polymetallic, Mangapure was going to produce copper, iron ore, gold, and silver. And then in the next video, he's finally going to kind of like put it all together of what he wants Monument to become.
Our job as management is to increase the wealth of the shareholders' value in the company. So what we intend to do with that cash is to be able to invest it in other projects that will give the company a long-term sustainable flow of cash. And we certainly intend to be a dividend-paying company. That is one of the objectives of acquiring a project like Mangapure, because it will have a diversified metal stream producing revenue, and it will be a long-term project.
Okay, so now you have the full thesis. Silinsing gold mine producing, they made a bunch of acquisitions. The idea was, hey, take that cash flowing machine and turn it into other projects. Those other projects will create more revenue. We'll take the company into a mid-tier gold producer along with producing other metals. We're going to be swimming in cash, and all that cash, eventually we're going to use it, and we're going to even pay dividends. And what you see here is a nice little graphic that came from the company's presentation at that time. So you could see in a visual format this nice presentation of how we're going to achieve this. So it was going to be gold, right? Producing gold, and polymetallic. And like I said, copper, iron ore, gold, and silver, right? So you see here that it was different stages of development: grassroots, advanced development, and production. And as you know, Silinsing was already producing. And then they had this nice presentation of how Mangapure was already advanced and it was going into development, and it was just a matter of time before it reached the production. And then the land package was like the Buffalo Reef and the Silinsing Deep. It was getting advanced, and it was going to be more mines feeding into Silinsing. And then Fame Hub was also part of that. And then Mersing was the new acquisition that he just talked about. It was a separate property, but also it was going to be put into production. And then later on, there was another property in Australia. So that was outside of Malaysia that was acquired, and it was very advanced, right? It was just turnkey. I mean, it already had a mill, and it was just going to be quickly put into production. So what happened? How did this turn out? And by the way, I didn't tell you that when I bought the stock, I only paid 2 times cash flow, and it had about $50 million in the bank. So 100 million market cap, I paid 2 times cash flow. When you net out the cash, I really paid like 1 times cash flow. It was impossible. It was impossible to lose money. Okay, let's take a look at the stock. What you have in front of you is the videos were recorded sometime in 2010. As you can see, the stock was around 30 bucks. Then, of course, people did make some money because it ended up going as high as 72 by January of 2011, and by April 2020, the stock was at 4 cents. So from the peak, the stock went down 95%. How is that possible? And yes, of course, today the stock is at 15 cents, but that's because some of the activists are getting involved, kicking the management out, and the stock is jumping higher. But it doesn't change the fact that the stock went from 72 cents to 4 cents. How is this possible? What happened to each of these properties? Silinsing was a cash flowing machine that generated almost $300 million of cash that was pretty much squandered over the years on these projects that were never ever put into production. Eventually, Silinsing ran out of, or was running out of, oxide ore. If you read my gold production book, you know there are 2 types of ores: oxide ore and sulfide ore. So oxide ore is cheaper to process, and sulfide ore is very expensive. It requires more processing. And actually, Yukon Nevada Gold had sulfide ore. That's why it needed a roaster. But over the past first 5 or 9 years of Silinsing, the company was feeding the plant with oxide ore, and because it was high grade, the cost of production was extremely low, as you heard it, $200 something, $300, and over time it was increasing a little bit, but not much, because that's how the company created $300 million of cash that first it was squandered on Mangapure, because the company spent, at first it only paid $60 million to acquire 70% of Mangapure, and then eventually later acquired the rest of it. So in total, it cost the company $75 million to acquire Mangapure. And who knows how much money it spent on studying it, drilling it, and creating, a 43-101 or whatever technical report. It could have spent another $25 million. So in total, it could have put $100 million into it. And then it was obviously drilling extensively. It was buying these other projects, and also was drilling and studying and doing all these things with the other projects that didn't really come into production. And when Silinsing ran out of oxide, they wanted to transition the plant from oxide to sulfide, and that means money, right? That means putting money. But by that point, they squandered all the money on all these other projects, and they didn't have the money to make that conversion. So they were looking at other technologies like bioleaching. And this is directly for you guys who are so into deep south resources. thinking, oh yeah, the CEO is going to tell me bioleaching is going to work, it's going to be fine. Well, that's why I don't even want to say la 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 la. I don't even want to hear it, because I've heard this with Monument. Oh, we have this new technology, it's going to be cheap and it's going to do this, blah 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 blah. Bioleaching is going to do this, and eventually it didn't work, and the company had to come up with $60 million to make that conversion. But again, it squandered all the money on these things that never came to fruition. And on top of it, at some point, after Silinsing produced $200 or $300 million of profits, someone came out and said, hey, I'm the owner of 5% of Silinsing, and came up with a lawsuit against Monument saying, you owe me 5% of all the cash flows. And as it is with all the lawsuits in the mining space, they always have no merit. They're going to be put away very quickly. Don't you worry about a thing. The next thing you find out is that the company lost the lawsuit and had to deposit almost $10 million into an escrow to settle that lawsuit. And at that time, it only had $20 million in the bank. So $10 million had to go to the escrow, and which obviously is a huge deal when a production is about to end from Silinsing, or the costs are much higher, and then you have to give up half of your cash because someone said, hey, I own 5% of Silinsing. At the end of the day, the company only ended up paying $3 million just to get rid of that lawsuit and not to fight it anymore, and got the money back. Because it needed to come up with $60 million to make the conversion on Silinsing from oxide to sulfide, the company was on the lookout for financing. It could have used the money from Mangapure, but no, it had to come up money with financing, and it didn't seem to be working very well. So what ended up happening recently, the company ended up selling Mangapure for $30 million. So they bought it for $75 million from receivership on a fire sale, put another probably 25 into it, I don't know. So they are probably into it for about $100 million, and they end up selling it for 30 because they need money for the conversion. Now, recently, as I said before, the reason why the stock is up from the low of 4 cents is because shareholders got together, got fed up with the company, and are fighting to kick out the management and to, possibly sell all the assets and create value. So anyway, this is just another example of a wonderful, wonderful mining opportunity that almost you couldn't even possibly think that it could have gone south, especially when it created $300 million of cash flows over the 9 years, and you only paid $100 million market cap for it. And then in 2020, at the beginning of 2020, it had a market cap of 10 million. Where did all the money go? I hope you enjoyed this video, and I hope you are still super, super excited about the mining stocks that you have in your portfolio. And I am sure nothing bad is going to happen to them. I'm sure your companies are going to deliver just the way they are promising. Thanks for watching, and have a good day. Microcap Explosions, a private membership website which doesn't include any miners except, of course, our beloved Oracle, which is the only miner that has delivered.